Have you ever felt your heart race while checking your portfolio, or gotten that sinking feeling when Bitcoin drops 10% overnight, or your favorite stock tanks? You're not alone. Welcome to the world of modern investing, where FOMO, fear, and hype can control your decisions more than your actual strategy. Today, on The Wealthy Path, we're diving into why modern investors panic, why it happens to almost everyone, and most importantly, how you can stay calm, confident, and in control. Ever feel that knot in your stomach when the market dips? Or that frantic urge to buy a crypto coin that everyone on social media is suddenly talking about? You're not alone. Welcome to the world of modern investing, where panic, hype, and the fear of missing out, or FOMO, can turn even the most logical person into a bundle of nerves. Today, we're diving deep into why we panic as investors and, more importantly, how to build a mindset that turns that fear into financial strength. Let's get straight to it. Why do we panic? It's literally in our brains. We're wired with cognitive biases like loss aversion, which makes the pain of losing $100 feel twice as intense as the joy of gaining $100. When the market turns red, our ancient survival instincts kick in, screaming danger. Then you add social media to the mix. Suddenly, it's not just your portfolio dropping, it's a global chorus of panic with endless posts, tweets, and videos amplifying that fear. Everyone seems to be selling, and the pressure to join the herd becomes immense. Without a solid plan, you're just a ship in a storm, tossed around by every wave of market sentiment. This short-term focus, checking our phones every 5 minutes, turns investing into a high-stakes, high-stress gamble instead of a calm, strategic journey. It's a recipe for disaster. So, what are the classic mistakes we make when panic takes over? The biggest one is chasing hype. You see a meme coin or a little-known stock skyrocketing, and FOMO whispers in your ear, "You're going to miss the rocket ship." So you jump in at the peak, right before the inevitable crash. The flip side is panic selling. The market has a bad week, and fear convinces you to sell everything at a loss, only to watch it recover a month later. Another huge mistake is ignoring the fundamentals. We get so caught up in the price action that we forget to ask basic questions. What does this company actually do? What problem does this crypto project solve? Is there real value here, or is it just hot air? And perhaps the most dangerous mistake of all, over-leveraging. Using margin or taking out loans to invest can amplify your gains, but it can also magnify your losses to a catastrophic degree, wiping out your entire account and leaving you with debt. It's like pouring gasoline on the fire of market volatility. Okay, so we know the problem. How do we fix it? It all starts with a fundamental mindset shift. You need to stop thinking like a day trader and start thinking like a long-term owner. Your goal isn't to perfectly time the market tits, to spend time *in* the market. Jeff Bezos didn't panic and sell Amazon stock every time it dipped. Long-term vision is your superpower. To do this, You need a plan. Establish clear written rules for yourself. For example, I will only invest in projects I've researched for at least 10 hours, or I will only sell if the fundamental reason I invested has changed. Not because the price dropped. This plan is your anchor in a volatile sea. Next, you have to curate your information diet. Unfollow the hype accounts. Limit your time on crypto Twitter or stock forums. Checking your portfolio once a week or once a month is far healthier than checking it every hour. And most importantly, practice emotional awareness. When you feel that urge to make a rash decision, just pause, take a deep breath, walk away from the screen for an hour. Ask yourself, am I making this decision based on my strategy, or am I reacting to fear? This simple pause can be the difference between a costly mistake and a smart, disciplined move. Now, let's talk practical strategies you can implement today. First, diversification. Don't put all your eggs in one basket. Spreading your investments across different asset classes, like stocks, index funds, real estate, and yes, a small speculative portion in crypto cushions you against a crash in any single area. If crypto has a bad month, your stocks might be doing just fine, and that balance brings incredible peace of mind. Second, automate your investing. Use dollar cost averaging, or DCA. This means you invest a fixed amount of money at regular intervals, say $100 every Friday, regardless of the price. When the price is low, your $100 buys more. When it's high, it buys less. Over time, this smooths out the volatility and removes the emotional guesswork of trying to buy the dip. It's the ultimate set it and forget it strategy. Third, use tools to manage your risk. Stop-loss orders automatically sell an asset if it drops to a certain price, protecting you from catastrophic losses. On the other side, limit orders let you set a specific price you're willing to buy at, preventing you from overpaying in a moment of FOMO. Think of these as your financial safety nets. And finally, a strategy that isn't about investing at all. Maintain an emergency fund. Having 3 to 6 months of living expenses saved in cash is the ultimate stress reducer. When you know your basic needs are covered, you're far less likely to panic and sell your investments at the worst possible time just to pay rent. Ultimately, this all connects back to your well-beingness. Isn't just about numbers on a screen. It's about your mental and physical health. Constant financial stress, driven by panic and FOMO, is exhausting. It erodes your confidence and steals your peace. True wealth isn't just about having a lot of money. It's the freedom, control, and peace of mind that come from being in charge of your financial life, not being a slave to its ups and downs. Remember, consistency and patience will always beat frantic, short-term reactions. Building wealth is a marathon, not a sprint. The market will always have its crazy swings. You can't control that. But you can control your preparation, your strategy, and your reactions. So, let's make a deal. The next time you feel that FOMO creeping in or that wave of panic washing over you, remember this conversation. Remember that FOMO and fear are normal, but they are manageable. Smart investing isn't about being the smartest person in the room or having a crystal ball. It's about having a strong mindset, a solid strategy, and the emotional discipline to stick with it. The real power isn't in predicting the market, it's in controlling yourself. Thanks for sticking with me today. If this resonated with you, give this video a like and hit that subscribe button for more content on building a strong financial mindset. I'd love to hear in the comments what your biggest struggle with FOMO or panic is. Let's keep the conversation going. See you in the next one.